Traders, we're looking at US oil, WTI, daily, and it coincides with a weekly. This low down here is a point of interest. The stops or liquidity that's resting under this bullish run, I really think that's being targeted. Now they've tapped into it, slightly tapped into it here, but my question is, are they looking to actually take out these lows? Good question. So I've got this as a target point, and looking at this from this perspective, what I'm always looking for is this. Let's just grab that. High to low, high to low, high to low, and on it goes, right? Fibonacci, high to low, the 618 fib pullback, or 50 to 618 to 786. This red 50 is my line in the sand. It's got to crack that, and I'm interested. So you could look for ideal price action that will invite you into the market whenever this passes through the 50. And we can pull it from this swing high to low, and look at that. See the 50, 618, and then we look at this price action for an entry point. Again, this swing high here, down to the low, swing, pulls back. Well, actually, we're looking at that there for an entry, and away we go. So you're going to wait for price to invite you in, and there's an opportunity. So if that's the case, I mean, at some stage, it's going to swing around and bite you on the behind and possibly take you out unless you catch it and you bail in time. But it's trending down, and on this time frame we have swing high, swing low, and lo and behold, I've got my ideal entry point. But we're trading into this level, and the question at this point is, does this, given that it's traded back in here, I think we're going to get a bit of a short regardless. Does it attack liquidity under here and look to take out these lows? That's the question. So swing high, swing low, swing high, right? It's a trend, okay? And we can anticipate, if it continues, that at least gets taken out. So there's a target. So what we're going to do is going to go down the time frame, and we'll better get closer to it, I think, maybe on a 30-minute, 15-minute, and just have a look and see what price action's doing, and I'll give you my take on potential entry, because what we want to do is, around these swings, we want to look for that reversal. We want to see price invite us in, and what does that look like? That's the daily. So we'll go down to a 4H. We know that we've got, well, this candle here, daily. At the moment, it's trading back resistance. So let's just go 4H. Have a look at this on this time frame, and it's the same thing. It's the same swing that I'm looking at. Grab your fib, high to low. There it is. Possible entry point. But let's get closer to this and see what it looks like on the lower time frame. Now, if that's going to be a short, we'll just set this up over here. Where are we going to set stops, and where are we going? Well, TP is going to be down in here at this low. There's a 1.77R, as you can see here, 1 to 1.7 risk reward. But the question is, where do we go with our stop? Well, we've got this low over here on the daily. We go above that. And yes, we can get taken out for sure. That's a possibility. The other thing you could do would be, if you want to trade it on the 4-hour, look at the average true range, find out what that says, and you could go 2 times the ATR on the 4H. What would that look like? Well, there's possibly 1 ATR, maybe. That's probably not the way to measure your ATR, but does 1.5 bring you back here? Does 2 ATR bring you up here? That's the question. And if that's the case, then you want at least 1.5R. And if you stretch your stop loss out, because you want to avoid volatility, that could be a thing. See above this green candle, these red candles back here. But, 1.5R is my bottom line, guys, and I'm getting 1.5 right here, within a pip or so. Consider that. Now, the risk would have to be the same. Whether your stop loss is here, you're going to risk $100, right? More, whatever. That's just rounding it down to $100 to make it easy to follow. Or you're risking $100 here. So I'm going to always keep my risk consistent and be able to manage your money that way. So let's just go with a 1.5R, stop loss above that. Takes you back up to the 78.6. Okay, fair enough. Yes, it can spike here, but look, it can get aggressive, guys. That's the way it goes. But if you followed the rule with the 1.5R all the way down, and you just got to determine your stop level, consider the risk, consider perhaps the ATR, and that's one way you can kind of work things out. I'm going to go down to a 15M or 30M to start with, and I want to have a look at this price action. Now, I don't mind what I'm seeing here. I don't mind what I'm seeing, and what we've got is, well, is that a 3 drive? I'm always looking for the price to be grinding up, and then I want to see it, if it's going to be a short, I want to see it tank. Do we get that? Not to the degree that I'd like to see. 3 drive pattern, we have, well, I mean, all of this is a drive. Second drive here, and then we got this final drive, and then a retrace. So this is a balance area, as you can see here, equal number of buying and sell activity through this range. It doesn't have to be parallel. So balance area, and, well, this is parallel. Here you go, look. Okay, so we've got this range. It spikes up, hits liquidity, and then we do get this imbalance. Now it's trading back, rebalancing this gap. This could be a sell right here. So let's short based on that. Market sell. I mean, you could go above this high if you want to really tighten it up. Trade it on a 30-minute and just go for a one, target this swing here. That would be probably what I would be inclined to do with this, to be honest. Given the data that's coming out today, it's going to be a really busy night tonight. Probably suggest you even stay out of the market. But just for some technical analysis and having a little fun here, this low, this price swing low would be the target for me. We've got a stop above the high. Understand the risk. Can you get taken out? Absolutely. That's why you keep your position size consistent. And there's a 1.79R trade idea on that time frame. If you want to go the 4 hour, well, it's going to be a bit different. And if this is $100, so is, say we went on a 4 hour and we went above here, that 1.5 would be my minimum R. There's a 1.69. It's a bigger time frame, so we're looking at now this price swing and this low down in here. Right? So there's a 30-minute idea. Here's a 4-hour idea. 1.5R minimum. Oh, gee, that's a wide stop, isn't it? Go down to 1.5 minimum. Okay. Anyway, guys, I'd invite you to have a look at my link tree down in the description below. Check out my Telegram group. It's free to join. All my links are on that link tree page, so check it out. There's a lot of interesting stuff there. Yeah, that's my take on crude, and with that, be careful tonight, guys. It's a big night. We've got a whole bunch of data coming out. Personally, I'm probably going to stay out of the market. So with that, safe trading, and we'll see you in the next one.